Welcome back, everyone. Thank you for joining us. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us again this week as we dive into everything in the markets and take a look at a deep dive. We're going to be talking this week about the new presidency in the US by President Biden and what that might mean for the markets. And we're going to touch on a few more things that are going on out there. But as always, thanks for joining us. We do this every Tuesday at noon live. We try to get out a weekly deep dive. We got one out Monday, just on 2021 and whether we're in a market bubble. We'll touch on that a bit today as we talk about the year ahead. But we go into a little bit what to look for as far as bubble stocks or bubble sectors, and what to be careful for the portfolio. So if you haven't seen that, you can go check that out at mikeonmoney.com or just reach out to us. We're happy to send you a link where you can watch that. Also, all these, remember, all these are now on podcast as well as if you want to listen to it on the go. So with that, let's move things along. And as always, remember everything we talk about here is for information purposes only. Make sure you talk to your advisor, reach out to us, do your own due diligence before acting on any strategies in your portfolio. Make sure it's right for you and the best selection for what your goals and risks are. So as always, you can ask us questions here on the live version through the chat. If we'll try to get to it today. If not, by all means, send us an email, give us a call. We will definitely follow up with you with any of your questions. And also feel free to send us in anything if you want us to take a deeper dive into a topic. Most our weekly deep dives are generated from people's comments or suggestions, so we're happy to look into any of those for you as well. So let's get things started. So we're looking for some news this week. We're looking at the U.S. home price index is coming out for November. Keeping an eye on the housing market. As we've seen here in Canada, numbers have been going up, volumes have been going down. So their overall price from the homes have been going up, but the volumes have been dropping a bit. Not surprising, we still have some unemployment issues. In fact, December we saw unemployment in North America, Canada, and the U.S. Both rise again after it had. I won't say a steady trend downwards. It wasn't a quick trend downwards, but a steady trend downwards. But we saw them both uptick late last year as this third wave, second wave, whatever we're in continues, and more closures. So still probably some unsteadiness there as far as volumes go for home purchases, but the low interest rates are keeping the prices up there. We're also looking to see the consumer confidence numbers for January out of the U.S. Probably you're going to see a drop there as well, just again with all the closures and everything that's going on. But we do have the new presidency, and so we'll have to see how people equate that. And then we're going into earnings season. So Rail is coming out with their earnings, so we'll keep track on that. And many more. I'll touch on them here in a second. The futures in the S&P 500 and Nasdaq have wavered a little bit. We've pretty much seen this for the last couple of weeks. Pretty flat markets, a little up, a little bit down. People are trying to decide a little bit on that bubble situation. These high valuations, and some obviously the transition in government and what that means. As I mentioned, these earnings weeks, we're actually looking for, I think today, Verizon, GE, 3M. 3M actually I think is out. Stock's doing very well. It's one of the holdings in our portfolio. It's been doing great for us over this last year and continues to perform. Raytheon is coming out as well. Amex, American Express, and Lockheed Martin all due to reports. And then following on Wednesday, Starbucks, Microsoft, and Texas Instrument, and then later in the week, Apple, Tesla, and Facebook. So we'll keep an eye on those just to see how the last quarter have gone for them. I don't think we're going to see too many surprises. Be interested to see Tesla because, of course, the stock has had such a run. I don't think the earnings are going to miss. but it might not be as high as some people might have hoped for. So we'll have to keep an eye on that as well. Alphabet, so that's Google's parent company, you know, are betting long-term on an investment they made in Verily. Verily being medical testing for the coronavirus. Actually, that's been going, you know, has not slowed down, you know, even with the vaccine coming out, and I don't expect that to really drop much. So I'm sure that's going to work out well for them. You know, we've talked several times and we've done some deep dives into ESG, or ethical, social, and socially responsible investing. You know, a bunch of US companies and billionaires kind of got together and created this roundtable, you know, and the purpose of it is to get corporations to be more responsible to their employees, more responsible to not just the stakeholders or shareholders, but to society in general. And they're having a real hard time with this balancing act with, you know, job cuts, operation cost, as we're seeing these shutdowns, and we're seeing hits on revenues. You know, how can they manage the social pledge to, you know, the shareholder pledge, you know, of course, being profitable. So they're starting to run into this quandary. It's easy to do, obviously, when things are going well and there's lots of money being made. But as they get into tighter balance sheets, it's a bit harder for them to balance the two, and how society judges them, you know, how they make those decisions. So I think that's going to be really interesting for 2021, as more and more companies are being very ESG aware, as investors are becoming more and more ESG aware as well. You know, time to pause. You're talking about Wall Street's growth and worry about that stock bubble. Obviously, with everything going on, and this has been a common theme of our weekly updates and our deep dives, is, you know, we've got record highs in the markets, you know, driven by certain sectors in a lot of cases. But valuations, certainly, if you're looking at individual names or sectors, you know, are definitely showing signs of potential pullback. But what does that mean for the overall market? We'll talk a bit more about that. And now the Fed, so the US Fed, we've got a new head of the US Fed just appointed. They're looking past the pandemic. You know, if we do come out of this later this year with the vaccine, or things improving, you know, what are we looking at from an inflation shock, and how do we how do they manage that? Obviously, that's going to be a challenge for them in the long run. I'm being told here my audio is echoing a little bit. Hopefully, it's corrected. But there, you know, investors or people have started to stockpile cash. It's about $2 trillion of cash on the side. Now, part of that, I think, is the bubble being a concern, and you know, and how that is going to affect things in the long run. And then also, sorry, I'm just going to check my audio here to make sure I've got the settings right. Yeah, I think so. Hopefully it's cleared up. Let me know if it's not. But the Fed's looking at, you know, what are they going to do with inflation? And, you know, printing all this money obviously has been a big, huge issue. And, you know, inflation is going to rear its ugly head at some point. And of course, we have another round of stimulus package coming out from the US, and hopefully that's going to help things, but it's also going to lead to more inflation. So the Fed's taking a deep, hard look at that. We're going to hear from the new Fed next week. So it'll be interesting to see how they message things from that standpoint. Congressional Democrats face a challenge in repealing Wall Street friendly rules. So under the last administration, or Trump's administration, there were a lot of friendly rules around Wall Street, tax cuts, you know, easing up of restrictions. All these things have been a big part of the stock market, or at least led to some of the stock market rallies we've seen, because it's allowed corporations to make more profits. Now, that didn't necessarily trickle down to the economy or to the workers, but from a corporate standpoint, it was good. obviously Democrats are now facing to revive that economy, and that means getting some benefits down to the employees. So that means might having to change some of those things. So one being corporate friendly, one being economic friendly. But obviously, no one wants to disrupt, the markets that much. So there's going to be this fine balance, which is really what we should have in Congress and in the Senate, right? As opposed to one side or another being able to pull the strings and just say this is what we're doing. It needs to be a balance between the voters and business and what's the best for the country overall. So I don't see that as a negative, but obviously it's going to be something the Democrats are going to have to deal with over the next 2 years, at least until the next vote. SAP, which owns Qualtrics, is aiming for $15 billion valuation for a U.S. IPO, and this is just following on this IPO craze we're in. The valuations have been going crazy as of late in the IPO market, and not really showing any sign of slowing, but that also lends into that bubble concern. Last time we saw this kind of crazy IPO market we've seen them since 2001, but 2001 probably being the most predominant one and the most damaging one when we saw a bubble burst in the IPO because of IPO overvaluations was the main driver of that. U.S. corporate buybacks are on the rise. So this is corporations buying back their shares, which is good for investors. I mean, and it shows confidence that the companies have in their companies, but it's also a balance sheet cleanup. So I wouldn't take that as an indicator that the markets are going to continue to rise. I'm not saying they're going down, but it's not necessarily always a positive indication. You have to really look at the individual names there and see what they're trying to achieve and why they're doing it. So let's take a look at the vaccine. Obviously, the rollouts, is one of the biggest global vaccine rollout and country as well. Canada doing, I'll say a reasonable job compared to the rest of the world. Obviously, it's been slower than Canada would have liked, and I think you'll see that. We're going to look here at individual countries around the world, and I think most countries started a bit slower than they would like. They're all adapted now to increase that or speed that up. We did see a little bit of an interruption in supply, but that's pretty much corrected. That's not really what's slowing us down, I don't think, at this point. We've got Moderna vaccine coming online now. Johnson & Johnson's is the final test. And more and more vaccines are coming online now. It's just a matter of getting it out there. And I think more countries are taking a much more broad-based approach. Obviously, the initial rollout focusing on things like frontline workers, care homes makes tons of sense. And now a lot of countries being led by success in other countries, especially things in places like the UK, where they're moving away from such a focused approach of having to, target a specific group, qualify that group. Now they're moving to the mass just by age, right? So you're just going to flash your ID. How old are you? Yes, you qualify. So I know BC and those are moving towards the age groups and hoping to speed things up with more mass inoculation centers where people will be able to get to a lot quicker and move people through faster. And if we look at globally, this is by province. Canada's currently percent of the population, about 1.99% vaccinated. Actually, as we'll see globally, not doing too badly. Different provinces are doing at different rates. Canada or BC just above the national average of 2.27, and moving, as quickly as possible. As more and more vaccines come in, and as I mentioned, as we move to this age category group, so we'll see that as well. On the global side, though, as the globe, we're just under 1%, at 0.88% vaccinated. UK probably, comparable to abilities to Canada and say the US, is doing a great job, just over 10%, and moving rapidly with their mass inoculation. The US is really starting to set things up. Of course, the Biden administration's got their 100 million vaccines in 100 days, trying to move forward. And they're running into hiccups, but they're pushing. They're sitting just under 7%. Israel doing a great job, almost at 45%, and UAE about 26, being the leaders. But some other countries around the world like Germany, Italy, France, moving a bit slower. Same as in Canada, just that initial startup, getting the infrastructures in place, getting the vaccines to the right locations, and also streamlining the distribution. Obviously, every time the vaccines come in, getting to the right place and getting the vaccine administered has been a bit of an administrative challenge, but things hopefully are getting better and better, and we'll see that speed up. Hopefully that graph really takes off like a hockey stick, and we can see that improve over time here. So let's take a look at the economy. So as I mentioned, the U.S. stocks closed just off their highest levels. Nothing really crazy, but a little bit of worry over the fiscal stimulus that's coming out. Obviously, the Biden administration looking in the U.S. to bring out the second, or I guess technically 2.01 or 2.10, as they did a small stimulus just at the end of the last year, but looking to do a more complete round. That becomes good. Comes with good and bad. Of course, another round of stimulus will prop up the economy a little bit, but it will drive the markets a little bit more into bubble territory, a little into overinflation. So some concerns there, and also exactly what it's going to look like. And also a little bit concerned of how quickly the vaccine rollout programs are going, and also what the vaccine rollout means. There's a lot of talk of, let's say we're all vaccinated. Airlines, cruise ships have already come out, I think, and said pretty much that people are going to have to show proof of the vaccine. This vaccine passport has been coined as a phrase that you'll have to travel or to do different things, maybe even sporting events or concerts. So, is that going to, all this concern over the vaccine, is that going to slow the reopening? Is that going to slow things down? So there is some concerns out there for good reasons, given the numbers that we're seeing in infections, and of course all the new strains that are out. How's the vaccines going to deal with that? I know Moderna has already come out not saying that their vaccine's not effective against the new strains, but certainly not as effective as the original strain. So as now we have multiple new strains out, keeping track of all that and how that's going to affect things. And of course, the dollar advanced a little bit on the safe haven, looking at the new stimulus package, but gold edged up. Normally, gold and the U.S. dollar go a little bit against each other, but gold edged up a little bit, just on concerns and of that rollout, and of course of the new stimulus package. Oil prices were a little bit in the green, just on the expectation, not necessarily today that things might reopen, but later in this year, but still stemmed a little bit or capped a little bit on the lockdown lows. So we'll continue to monitor oil. As I've mentioned, I think in previous weeks, we've started to dip our toe a little bit on oil. It's done, our current exposures have done well, but it's really early stages, so be cautious there. Microsoft, as I mentioned, is going to post their second quarter earnings coming out. That's expected to do well. Of course, the tech company continuing to sell and grow as people work at home. Johnson & Johnson is supposed to expected to disclose late stage data on their vaccine this month. And I know several countries, including Canada, kind of already have their hands up for that one. So assuming that gets approved, it should really help their company's forecast profit as well. And the Federal Open Market Committee begins a 2-day meeting on interest rate policies in Washington. Obviously, as I mentioned, kind of new Fed going to come out with a new statement. Don't think we're going to see a big reversal or forecast change, but the language is always important from those meetings. So we'll keep a close eye on that as well. Other top news: Moderna says believes the vaccine will work against the new variant. They did show some concern that it might not be as effective, but they do still think it could work, but it might diminish its overall effectiveness. Only time's going to tell on this, especially with so many new variants coming out. Boeing 737 MAX, as we've seen previously, got approved in the US, it's been approved in Canada. It's now been approved in Europe to fly again. Obviously, the families of the victims that were involved in those two crashes, aren't overly happy. They thought maybe it should be longer. Maybe it was, was this rushed to get back in? I mean, hopefully not. Hopefully it's been well vetted. I mean, there's a lot of liability around making sure that it's been vetted properly and the technology's been fixed. But obviously, if you were directly affected by that, you don't want to see that coming back so quickly. GEs, we mentioned, are going to be reporting. They do a lot of work on the engines for the 737, so that's going to help them in their quarterly earnings as that gets back into the air again and back into production. And Google workers are looking at forming a global union alliance. So Google employees across the globe are getting together after they formed a union in the US and the Canadian offices. They're looking at taking that global. So we'll see how that impacts Google. Hopefully not too much. And it's just a matter, I know Google's had some social issues with employees, kind of the direction or the work they've done in the past, and how they handle people's data and things like that. So maybe this will be better for consumers as well. Coming up in Canada, Canada's obviously worried a little bit about the Biden's Buy America plan, as we talked last week about the XXL pipeline demise, and Biden signed an executive order to buy American first. This is a tricky, it's not necessarily bad. In fact, you can definitely see Biden's logic when you're trying to rebuild an economy, especially like a big consumer economy like the United States. You want to encourage people, companies, governments to buy American first. Biden has kind of, telegraphed that it's not buy American only. It's simply, if there is a good, affordable option to buy American, use that option first before looking outside the borders. And that's when you're trying to get your economy re-stimulated. That makes a lot of sense. I don't know if that's necessarily going to hurt a ton to the Canadian economy, but obviously it's a fine line between nationalism and, just look American first before looking outside of the US. So we'll have to see how that plays out, how the US government, manages that fine line as they move forward. Trudeau came out this morning after his conversation with Biden, saying he's optimistic that it shouldn't affect Canada too much. And obviously the pipeline. The pipeline, I wouldn't say the Keystone was necessarily driven by that. I mean, this was, the Keystone pipeline was an issue under Obama. Now that you've got Biden back, of course, that becomes, back to the forefront of issues. And TransCanada's even said, okay, that's not being built. It's not overly going to affect them in the long run. I don't think I would run away from TransCanada pipeline as an investment. If you had it, I would continue to hold it. I haven't added to it because we really didn't see a big drop on it. I don't know if it was that impactful, but obviously something to keep an eye on moving forward. But then, it bodes well for the government funded TransCanada or Trans Mountain pipeline that they were trying to get pushed through. Obviously, that means that one's going to become more of the forefront, and more products can be moved through that one. So, you win a little bit, you lose a little bit. TELUS International, or Canada's TELUS, is spinning off TELUS International, an IPO worth about $7 billion. Again, part of this IPO craze. TELUS International is a subsidiary of TELUS, so this deals with their international call centers and other services. That's being spun off to a public IPO. It's expected to do well. This has actually been on TELUS' plate for a while. I don't think that they necessarily rushed the timing of this, but I do think that, given the IPO appetite right now, they've had this ready to go on the shelf, ready to go for a while, and I think they just see the timing is right. BlackBerry was unaware, or they came out saying unaware why their stock prices surged. So for us old folks, or for people like me who remember carrying a BlackBerry, it's kind of like, yeah, why is BlackBerry jumping up, 150% since January? And I'm actually going to dive into this at the end. But BlackBerry came out and said, we have no idea why this is happening. We do actually know why it's happening, but it's not caused by anything at BlackBerry. And we'll talk about that and the challenge here briefly. Canaccord, which we talked about last week, they had the failed takeover bid for Carrefour in the US, or sorry, in France, due to the ministry, the France finance ministry, saying that they didn't approve the takeover. So Couche-Tard is moving around. As I mentioned last week, we did have in the portfolios. We bought really cheaply takeover was announced. The takeover drove the stock up a bit better, and that pulled back. We actually bought it in that dip, but it really hasn't affected things. And in fact, Couche-Tard's out there quietly reassuring shareholders, saying, "Hey, our growth strategy is not interrupted by this." And in fact, they're still talking with Carrefour and the French government to see maybe there's prospects for it down the road. And the stock has bounced back really nicely, not to the previous high, but we were able to buy in on that drop. And again, that volatility has provided an opportunity for us to make some extra cash there. So nothing to worry about there, and we continue to see that as positive. As I mentioned, the US dollars, it moved up slightly, and it's looking it's going to stay there for a little bit, for the next couple of weeks, at least until Biden's proposed $1.9 trillion relief package is vetted, and all the details are hammered out. But again, with that's inflation. So, the trend on the dollar looking, continue downwards. The euro has remained pretty resilient, with the whole Brexit thing being done, or at least negotiated, even with everything that's going on in the Italian political situation. It's left it fairly unaffected, as the Italian Prime Minister is set to resign. So, everything going on well for the euro for the next little bit. And the bond market, the yield on the 10-year Treasury ticked up a little bit. Very, very small move as we look at the yields dropped a little bit as that stimulus package is coming out. Right? On the commodity front, as I mentioned, crude went down slightly, then back up on the futures again. So that's holding in steadily on the outlook for later this year, as we talked about. But obviously with everything still being pretty closed, nothing moving right away. Gold prices, as I mentioned, slight tick up, moving mostly on a little bit of concern on everything that's going on. But again, it's that hedge against that next stimulus package and the inflation impact of that. And as I mentioned, of course, the Fed coming out next week. So let's talk about Biden. Let's talk about the new administration in 2021 and what to look at. So, going into the election, just to recap things, a lot of people concerned, obviously, as the Trump administration, the previous administration was very business friendly. The tax cuts were very, very good for businesses and earnings. Obviously, the less your tax, the more money you're keeping in your pocket. And lower restrictions, whether it be environmental restrictions or just bureaucratic things to deal with when it comes to running the company. All that was made better under the last administration. Not good for the individual or employees, but really good for corporations. So are we heading into Biden's administration bring the stock market down? Well, that's a tough call. Yes, of course, the new administration is going to be closing up some of those gaps, not to slow business down. That's not their goal. That's not in their best interest. At the end of the day, what they're trying to do is get more money into the employees' hands to help stimulate the economy, because corporations don't stimulate the economy. People spending money stimulate the economy, especially in a spending economy like the United States. So there is a bit of that headwind there, as we've talked about. They're going to have to walk a fine line between bringing the economy back and managing those restrictions or those tax breaks for corporations. That being said, the Biden administration, or this new administration, is taking over a pretty damaged economy. So there's that headwind to deal with. We've seen a big divergence between the stock markets and the economic numbers over this last year as the economy continues to be damaged, but the stock markets continue to rise. So they've got to manage that aspect of things. So you don't want to collapse the stock market down. At the same time, you've got to stimulate that economy to catch back up again. And that's going to be a tough job. So that's not necessarily Democrat versus Republicans. If the Republicans would have been in office, they would have had this exact same challenge to deal with here in 2020. So that is something to keep a close eye on, and it is something to be aware of as far as concerned, especially when we talk about the valuations and in the current market and the potential bubbles. So as I mentioned, we did a big video on the market bubble or potential market bubble of 2021. And I do think it's a big concern. So the takeaway, the summary of that video is, yes, I'm concerned about a market bubble, but certainly in individual names and sectors. And I keep on going back to 2021. That wasn't necessarily the last bubble. I mean, we've seen real estate bubbles. We've seen oil have a bubble when it got up to $150 a barrel. We've seen gold have a previous bubble. So the dot-com bubble of 2021 was not the last bubble. But why I keep referring back to that one is very, very similar to the one that we're seeing currently, in that it's more sector specific. So that does not mean 2021 is not an area of opportunity under this new administration. It simply means we have to think a little bit differently. And what I mean by that, if you look at 2001, when we saw that dot-com bubble, that crash or that collapse was very targeted to one or two sectors, hence the dot-com, right? All the companies that were coming out with their dot-com in their name. I always talk about pets.com came out. They did the big, raised $1 billion in an IPO because it was IPO crazy. Any company that had .com in its name pretty much got to $1 billion valuation out of the gates, regardless of the underlying value of the company. And pets.com was no different. They went and spent something like 25 million or 20 million on a Super Bowl commercial, and 2 months later they were bankrupt because there was no solid business behind that. People were just buying the stock up for no real underlying reason. So I think what we're going to see is those companies, those overvalued companies, they will get caught in this bubble and will suffer or will take a downturn in 2021. But I do see what we saw in 2001 again. We saw the financial sector, the banks, take off dramatically because they were deep value. They hadn't seen a lot of return take off. We saw oil take off in 2001. It had been down to $27 a barrel and it rallied up. Because those were value sectors. Now, I'm not saying those are the two sectors for this year. I do like Canadian banking for this year. As I mentioned, I'm slowly looking at oil, but there's a lot of other sectors out there that have been ignored that there's a lot of value. And I think that's going to be the play for 2021 and under Biden, because he's looking to diversify that. He's looking to diversify the economy. And also smaller companies, we call them small cap or small capitalization companies. I don't mean penny stocks. I just mean not your Coca-Colas. You want to go look at companies that have a lot of value and are growing rapidly. And these are the ones that are coming out of this pandemic that have taken advantage of being nimble, right? They're able to adapt faster. They're able to adjust better to the new conditions that are out there and will grow quicker. And so those are the two areas I really think for 2021 we need to focus on. But if you're looking at any names in your portfolio, this goes to the bubble. What causes a bubble? We are seeing today, which is what concerns me, that we might be forming a bigger bubble, is we are seeing people buy. They don't know why they're buying. Let me qualify that. They don't know why they're buying. We can ask people why they're buying a certain stock, and they're saying because it's going up, or because I read about it, or because. But you won't hear people, you're not hearing people often say today, oh, because their earnings have been increasing, or the growth outlook is really strong, or they don't have any competition, or there's no, it's really hard for anyone to get into that marketplace quickly to compete with them. So they have a value prop or a value growth line there. We're just seeing people jump on stories or brands for no other reason other than it has been going up, and that they like the story behind that brand. And be very cautious to these bubbles. And in fact, just breaking in the news in the last few days, and I'm going to try to do a deep dive on this tomorrow, is if you haven't followed the GameStop story. Now, it's BlackBerry is the same story. And what's happened here is just that. People are jumping on a name, driving up the price for no reason. If you followed my videos, you know I've talked about people accidentally doing this over the last year with things like Hertz that went bankrupt, or Zoom. There was two Zooms, Zoom, the software that we're using here today, and there was another Zoom stock that had nothing to do with that software, and people jumping on it because they accidentally thought they were buying the Zoom technology stock. So we saw that in 2020, but now it's being done on purpose. And if you don't know what Reddit is, don't feel bad. I barely know what Reddit is. It's basically online forums. Young people use them a lot. It's not necessarily about investing, but about any topic. But they've started to latch on to the idea that they can get in numbers, right? A lot of young people in numbers to drive up a stock temporarily. What happened with a company called GameStop, which is basically a retailer, brick and mortar, go to the mall and buy a DVD or a cartridge of the video game and take it home. So obviously that business, especially through the pandemic, it was dying before that as more and more computer game manufacturers or producers have moved to an online model where you buy online or you just play online and you don't have a physical game at home. So that company was already in trouble. It was already pre-pandemic. It was already seen as not doing well, and of course, pandemic has not helped that. So a company down in the U.S. which specializes in shorted, so that's when they say, we're gonna take advantage of this company going down by selling its stock and winning by buying it back cheaper. They came out saying GameStop's a short. It's going to drop by this much, and they put that out. And GameStop became I believe it got to number one, or at least one of the top shorted companies in the United States. So the outlook for this thing was low. Now, all these young gaming community people got mad at that, and they went on Reddit and said, hey, let's go on our little online world and start buying up GameStop. Not because it's a good company, not because the earnings are going up, not because it's a good deal, but because they went out in such big volume. They drove the stock from $20 or $19.90 a share in a few days up to 140 yesterday, came back down. Now it's up again, I think $45 today. I think it's trading around 120, 130 before I started filming this, a share. So they've artificially driven up that stock price, which has lost billions of dollars for all those people that were shorted, probably on sound investment decision that the stock was very likely headed down, or at least lower, if not to zero, as that business model was struggling to survive. Now we're seeing the same thing, and that Reddit community has gone out and said, hey, let's do BlackBerry, and they're driving BlackBerry up. So there's absolutely no reason to be driving that price up. Some people have made money in this process. Some people will make money in that process. If you got in early enough and you got out early enough, and those early entrants on that GameStop stock used things called calls and took advantage of it and made millions of dollars. But that's all going to be on the back of someone who's going to be left holding the bag when that stock stops going up and that community moves away, and that volume moves away, and it collapses back down again, which is inevitable because while they are a lot of numbers in those people, the dollar value isn't that high. So it's not sustainable over a longer period of time in the market. So be very cautious when you're looking at any company. you know, when we have a bubble, this is what, you know, this is a micro bubble that we're seeing, but, you know, a bubble is based off that same premise that you have a lot of people buying it for not the right reasons and driving it up unintentionally sometimes intentionally, and then you can be left holding the bag on something that doesn't deserve that valuation or doesn't deserve to be that high. And that's if you talk to me in the past, and I've often said, you know, we're holding cash while we look for a deal, and you know, even though the market's going up, it's because we can't find something that we feel that the price is right to pay for, because you don't want to pay too much. Yes, it might still go up from there, but why is it going up there? Be very cautious. So when we talk about bubbles, we're in a little bit of new paradigm here when we talk about this particular bubble, in the fact that we've got this group of the population that's able to mobilize a lot of people in a very short period of time, but for the wrong reasons. And yes, if that sounds illegal, it could potentially be illegal. And obviously this is new, so we'll have to see how that plays out. But just be cautious out there. Know why you're buying something. Know what's in your portfolio and why it's there, and make sure it's all for the right reasons. You'll be fine. Even if we have a larger bubble, if you're in the right sectors and you're in the right names, you know, a pullback might even just be another buying opportunity for you if you know why you bought it, and keep that in mind. So that's what we got to see for 2021. I know it sounds a little rough, and I do expect some volatility here, but I do see it as opportunity. As I said, we're shifted from that growth momentum 2020 kind of portfolio to a value small cap portfolio. That doesn't mean more risk. It doesn't mean less return. It just means a different approach to a different marketplace. So with that, as always, join us at mikeonmoney.com. If you have any questions, reach out to us. Happy to talk to you. Go check out the podcast or the video on bubble markets. It takes a deeper dive into all this. And look in the next couple of days for the one I'm going to do a bit more deep dive into this GameStop Reddit story, because I really think people have to be aware of that. So with that, thank you, everyone. I hope you're doing well, and I will talk to you next week.